Welcome back to Financial Fridays here in Las Vegas on KLAV 1230. We're glad to have Frank Spady here.
Yeah.
We got we've got the money doctor out of town in Denver in the high elevation, and
snow skiing, isn't he?
We got Frank in here enjoying the music. He brought in the new tune, "Welcome from Allentown."
Yeah.
So because we've got a guest, we've got a new guest to Financial Fridays today. Sort of like we have this substitute doctor in the house with Kevin Brocious from Allentown, Pennsylvania. We all know that Leonard Wright is an AICPA money doctor, and this is one of his comrades in the operating room. We're glad to have Kevin with us today on Financial Fridays. Kevin, have you heard that song, and did you enjoy that with Allentown? We loved it.
Yeah. That's
you ever hear it before, Kevin?
many times.
I kind of missed it, actually. I was kind of glad we were
I'm glad we got to hear it. It's been a while since I heard
it. It has
the
been
band.
a while.
Yeah.
You guys dug that out of the archive somewhere. Huh?
Yeah, we came digging it out. So, Kevin, tell us a little bit about your background and what makes you a money doctor, and what you do with that, and your firm and so forth.
Yeah, I own a financial planning and money management firm, Wealth Management, here in. I have offices in Allentown, Pennsylvania, in Plymouth Meeting, Pennsylvania, which is right outside Philadelphia, and also an office in Bridgewater. I participate. I'm a member of the AICPA and participate in the Money Doctor program, and the program reaches out to the public, and what we do is answer financial and tax questions for the general public, and it's a free service. It's on the AICPA website, 360 degrees of 360 degrees of I forget. I'm sorry, but it's on the AICPA website, and it's a free service. So, first thing I would say to folks out there listening, if you have any questions, go ask one on the website. You'll get a money doctor to answer it for you, and the money doctors are certified public accountants and personal financial specialists.
That is for sure. And we advertise them regularly on our show, 360financialliteracy.org, and Tax Insights are great vehicles, and we have links on Leonard Wright's app.
That's right. Don't forget the
tool.
tool.
The Leonard Wright CPA app has links directly into those, so that's great. But tell us a little bit about what's on your mind today regarding 401ks. I know that there's a lot of things going on right now. We talked with Jay earlier about some of the complexities, but tell our listeners a little bit about the rolling over features of the traditional IRA and what your comments are about what's happening in the market right now.
Yeah, well, let me give you a perspective first on what's happening in the market, and then we can talk about. I guess we can talk about rollovers then. And let me talk first about what I get a lot of questions about recently from prospective clients. Is questions about bonds, and it always seems to circle around. Boy, I didn't know bonds could lose money, right? The fact of the matter is, all bonds have risk, and although even government bonds have no default risk. The U.S. government is not going to default. And they have no call risk. They don't call their bonds in. But all bonds have something called interest rate risk. And, that's the risk associated with the coupon rate of your bond not being the same as the current market rate. Now, what we've seen over the past 30 years, really, I think we got spoiled a little bit because we've had a bull market in bonds. And now what I mean by that is we've seen steadily decreasing interest rates over the past, say, 30 plus years. Bond prices and interest rates move in opposite directions. So as market interest rates come down, holders of existing bonds, the value of those bonds increases. So what I tell prospective clients is think of it this way. Over the past 30 years, suppose you purchased a bond, a $1,000 bond, paying 5%, and then interest rates went down to 4%. Your bond is now worth more than $1,000 because your bond is now paying more interest than the market is paying. And so if you went to sell that on the open market, you could get something more for your bond than the $1,000 that you paid for it. Now, what we've been seeing lately, though, is really interest rates can't go any lower, right? You know?
Yeah,
so,
we just talked about that with Andreas. So.
Yeah, okay. So there's only one place to go, and that's up. So most people haven't experienced the rising interest rate environment. So what I've been seeing now from people is prospective clients come in and say, boy, I bought this government bond. I thought they were 100% safe. And I lost 15% last month. You know, how did that happen? Well, the reason that happened is, you know, when you peel it back, you find out that they have a long-term bond in their portfolio or a long-term bond fund, which is much more sensitive to interest rates. And as interest rates fluctuate just a little bit, and, you know, they've been moving up, and I expect they will continue to move up. So holders of existing bonds and existing bond funds are going to lose money.
Yeah, the reality is, we talked about it earlier, that we have sort of a balancing act because you have these new taxes which are coming down the pipe in 2013 with the net investment income surtax, and we've got people saying, hey, you need more tax-exempt interest and you need to protect yourself for planning, and now you've got this balancing act of what the real, you know, investment worth is.
Yeah. Well, yeah, and, you know, there have been some, like I said, some significant losses. Well, as people reach for yield, right? Because, you know, we all know if you buy a short-term bond fund now, it's not paying much money. You know, and as people are reaching for yield, they're reaching for the longer-term bond funds. And, you know, risk and reward is always linked. And that's one thing we can never forget. So the longer-term bond funds are paying more, but the reason they're paying more is because they have more risk associated with them.
Yeah. And Kevin, I just have a question. This is Jason. Sometimes, usually, I mean, people want safety in their portfolio, and they look to bond, fixed income. But, you know, as you were saying, having a 15% drop in principal in 1 month is not very safe. So have you had those conversations of kind of how does that go, educating your clients on the risks of bonds when historically they've been pretty, you know, viewed as being a safe thing? Is that common, kind of that educating the client on that particular point?
Yeah, that's. I think that's a very critical thing to do with clients, and so they're prepared for, you know, the downside when it comes. It's like preparing them for, you know, another stock market crash, which will eventually happen, right? I also prepare them for, you know, before where you could say, hey, don't worry about the fixed income. You know, if we get a crash, that'll be safe. You know, 40% of your portfolio will be safe. Don't worry. But you really can't say that anymore because the environment we're going to see going forward is going to be an environment of increasing interest rates. So what I try to do with my clients is, first of all, not get them in, you know, the longer-term bonds. We try to stay, you know, short-term, intermediate term, a little bit in intermediate term, and really haven't gone out to the longer term. Now, the complaint I get is they're not paying a whole lot of money, and so that's when I start, talking about risk and reward. All right, so there's less risk. I would rather take, a short-term bond with less risk right now, paying 2+%, than a long-term bond with a lot of risk, paying maybe 4%.
Is that sinking in? Yeah, is that sinking in?
Yes, it is.
Good.
Yes, it is. One thing I talk to them about is the duration of the bond funds, and every bond fund has a duration, and what the duration of the fund will tell you is how much your fund will fall, or how much your investments in that fund will drop for every 1% increase in interest rates.
Mm-hmm.
So in other words, if you're
Right.
holding a longer term fund duration,
and real quick, we got about a minute and a half left. Where can they find you? Let's do that since we're running out of time. Sorry about that, Kevin.
no, not a problem. My website is wealthmanagement1.com. Wealth management's one word, and then just the number 1.com. And phone number is 484-264-6270.
Kevin, so happy to have you on the show. We'll talk to you next time.
I appreciate it. Thank you.
Okay. This has been Financial Fridays. We've had a great show with all our wonderful guests, Kevin, Jay Belt, and Andrea Murad. Frank, nice to see you.
I was glad to be in town.
We had our resident money doctor come in too, so that was good to have a replacement for Leonard today.
We did. We had the
Allentown
supplementary money doctor. This is Financial Fridays on KLAV 1230. We'll see you next week. Always at 3 p.m. on Fridays. Have a good weekend, everybody.
Yeah, be safe out there.
The best, fairer than all I can see. She's deep in the heart of the Golden West. Home means Nevada to me. One more time now. Home means Nevada to me.